call the meeting to order. Would everyone... Are we not doing the Pledge of Allegiance tonight? No, okay. All right. So, good evening, everyone. I'd like to report out on our closed session, item C 1.1, conference with legal counsel, anticipated litigation, government code section 54956.9B, number of cases 1. The board reached a settlement agreement on that, and it was approved 5-0. Item C 1.2, student case number 181901 was deferred to a later meeting. And item C.1.3, student matter, Ed Code section 48918A, student case number 181902. We have a motion there.
I move that student 181902 is in violation of the California Ed Code section 48900A2. Whole thing? I further move that student 181902 be expelled from the Carpinteria Unified School District for the remainder of the 2018-2019 school year, and the expulsion be suspended so that the student may complete the remainder of the 2018-2019 school year in the district instruction program of Carpinteria Unified School District.
All right. Can I get a second there?
A second.
All those in favor?
Aye.
Aye.
Okay. We'll move on to C2, the 2018-19 second interim report.
So tonight we have the second interim report, and unfortunately we don't have the overhead, so I'm going to go through the PowerPoint, and I'll tell you as I'm moving through the slide deck what number I'm on. So I'm going to, a lot of this is repeat information, so I'm going to summarize kind of what we do for Sally and Jamie. The second interim, this is on page 2, is a reporting period that brings any budget changes as well as our actual expenses through January 31st. And it's the second time we do a litmus test on our spending versus our budget, and is it aligned, and are we spending where we should at this time of year. On page 3, I've included, this is a slide I haven't brought to the board yet, but I think it's an important one. I think we're going to be repeating it when we bring our interim reports. And it talks to the Ed Code provisions that dictate that this does come to the board. It is something that the board in Ed Code, it says the board shall approve. But I'm going to direct you to the bold red on the report that says both reports shall be approved by the district governing board no later than 45 days after the close of the period being reported. And that's the second interim. That's what we're bringing tonight. And then the second Ed Code section, 42128 below, talks about that if it's not approved, the county can hold our warrants and can not issue paychecks. So it's really important that this is something that we bring to the board and it does get passed. On page 4, the AB 1200 certification criteria, there's 3 criteria: positive, qualified, and negative. Positive means that we can meet the current and 2 subsequent years. Qualified means that we may not be able to meet one of the 3 years or one of the 2 years. Negative means that we will not have enough cash to finish year 2. So negative is like the bad place. We don't want to ever go there. We're recommending a positive certification. On page 5 is a summary of the changes to revenues. And we compare this from first interim to second interim. And first interim was what we brought in December. It's actuals through October 31st. Second interim is actuals through January 31st, so just slightly more than half the year is over. In the green box below on the slide deck are the changes by major category. And you can see that we've had some minor adjustments to state aid, which is the special ed part of property taxes. That doesn't have anything to do with the general fund part of property taxes. We've adjusted our categorical federal revenues to the awards. Most of these awards come in anywhere from late November to current, and some won't come in till final till, of course, year end. We've adjusted state revenue again to categoricals, and the big one here is a lot of money, $165,000. This is CTE, and we're bringing fund balance up to the revenue because we're spending it. And then the local revenue, we've adjusted the unrestricted revenue about $8,400, and the restricted is according to all of the donations and grants that come in on the restricted side, for a total change to revenue of $311,366. On slide 6, we do the same with our expenses. In this budget revision, we've got the final cause settlement. The board approved it in January. We paid it out in January. So that was recalculated on final payment, and so that was a downward adjustment to expense, meaning it was about $20,000 less than I projected. Good thing. And then some changes into other restricted expenditures for the grants. Now you see how we increased the revenue, we increased the expense, so that offsets itself for a net change to revenues by $132,399. On slide 7, it puts it together and looks at how we affected our increase or decrease to fund balance, our ending balance, and our reserves. Midway down, you'll see ending fund balance. We went from 2.4 to 2.6 million, meaning we increased our fund balance by $179,000. This is predominantly all restricted money. So you have another handout that is a multi-column handout. That's the multi-year projection. And that shows you what changed between restricted and unrestricted dollars. So the unrestricted side decreased by about $17,000. So it was that $8,000 in revenue minus the $20,000 in expense. And the restricted side had the majority of this change. So it did change our ending balance, but we didn't change much of the unrestricted side. On page 8, you can see how this changes the restricted and the unrestricted to the total general fund. You can see that in the middle column where it says restricted, the excess of revenues over expense is $150,000. That's the majority of what we changed in this interim. And the fund balance is all restricted on this side. It doesn't have any bearing on the unrestricted general fund. The unrestricted is deficit spending, $736,617. That's less by about $17,000 from what you saw in first interim. It's very similar, not a lot of change. On page 9, we updated the 5-year comparison, revenues and expenditures year over year for the past 5 and current. So you can see our revenues from prior year have gone down just under 0.5%, and our expenditures have gone up by about 0.5%. And a lot of that was, remember, in the 18-19 year we made cuts. So on page 10 is where we look at the second interim actuals. The green bar, column C, are actuals through January 31st. Those don't include any encumbrances. It's actually payments made. And you can see both for revenue and expense, the percent that's been received and expended to date. Now, on the revenue side, since we only receive property taxes in December, April, and then we settle up at the first week of July, that 55% is about where we should be. The federal and state revenues will always lag because for federal revenues, it is not unusual that we don't receive the remainder of federal monies until the fall of the following year. For instance, to date, we still have not received last year's final IDEA SPED money, and it's March. So the feds pay very late. The expenditures, when you look at salaries and benefits, we are where we should be. 51, 55, and 46%. We are where we should be. But when you look at the books, materials and supplies and the services and other operating expenses, it looks high, 81% and 75%. And that's because most of our spending in those categories, especially with curriculum, we purchased a lot of curriculum this year, school supplies and the school needs, they buy most everything at the front end of the year. And from here on, there's not a lot of spending that takes place. So while it looks like it's not proportional, that's not untypical. Same with our services and operating expenses. Aside from our utilities, most of our contracts are expended in full by this time of year, and we don't have a lot of outstanding. So the interesting thing I want to point out, because this is something that will come up in our future board meetings, when you look at the revenue we've received at $15,600,000 and the expenses at $16,300,000, we still haven't received enough revenue to match what we've paid out. And that's why we have a TRAN. So that's what...
Negative cash flow.
Negative cash flow.
Red.
Right, so I'll explain that at a future meeting when we go to renew our TRAN a little further. So, you know, districts often have to have what we call borrowing mechanisms for cash.
What do we pay on the TRAN?
Cost of issuance on $5 million is just under $18,000.
That's even the interest to borrow, or that's our overall expense
That's our fee for the TRAN.
to establish the line.
Out of $5 million, we draw about 4.8.
And then we're paying about 4% on that.
Mm-hmm. Actually, we got less than 4. I think we got a better rate than that. It was like 2 something.
For about 5 or 6 months.
So the TRAN, you can draw the TRAN when you need it. It has to be paid back within that fiscal year. So it has to be paid fully by June 30.
Yeah.
Yeah, it's a temporary borrowing. And because it's a kind of a government intended mechanism, we do get pretty good rates. So it's kind of like when we went out for the bond sale.
Yeah, no, my point is that it's still an expense.
It is.
That if we had better reserves, then we conceivably you're going to have an additional $120,000 in lower interest cost associated with borrowing that $4.5 million.
Well, yeah, we'd have to have like in excess of that $5 million to be able to manage the cash.
Yeah.
Because fund balance doesn't mean cash balance. The fund balance is a budgetary mechanism. It's not a manifestation of actual cash in the bank. It's what's owed. It's kind of like for instance, you know, you have an insurance term called IBNR, incurred but not realized or paid.
You're an accrued balance
right.
sheet versus
it's modified
a cash
accrual.
Yeah.
Yeah. It's complicated. But that's why, you know, we watch that closely. We make sure, Nancy's awesome. We are always watching our cash. We're okay. And we haven't fully utilized the $5 million. We may, as we get closer to, depends on when taxes come in April. And then on page 11 is the multi-year at a glance. This is the document that decides whether or not we are positive, qualified, or negative. The 18-19, 19-20, and 2021 have to all be at least 3% reserve or higher, which we are. The 19-20 column in this multi-year does reflect the reductions that were presented at the last budget board meeting of the $1.1 million. So the 19-20 and 2021 budget versions are the multi-year you saw at those budget presentations for the 19-20 budget with the updated 18-19 second interim budget. So there's some slight modifications to that. They're only a fraction of a percent different.
So can I just clarify? So the title should say with reductions in
19-20.
19-20.
Yeah,
and that's the
I'm sorry.
1.1 million.
Yes. Yeah. And then the final page does talk to that. The multi-year projection includes reductions of 1.116, so 7.1 and 19-20. And then we're going to continue to be bringing budget presentations to every board meeting through the adoption. And the June 11th board meeting is where the budget and the LCAP will be brought for public hearing. And the June 25th meeting, it will be brought for adoption, the LCAP and the budget.
Okay. So can I get a motion to approve?
I move to approve.
I'll second it.
Discussion? Maureen, do you have anything? Rogelio?
Yeah, I have some questions. So I started looking, well, I looked through the entire document, but obviously don't have we only have 4 days to review it, so didn't have everything under control. And so the big question that I have is, does this document include the $1.1 million in changes, if approved?
The SACS document, the state report,
Mhm.
is 1 year only. That's the 18-19 budget.
So it's actually, it's just,
the current year only.
right, so we're just,
The multi-year is the only thing that reflects the 1920 and the 2021 for that multi-year certification.
right, so, sorry, it's late and we've done a lot already
So,
tonight.
so no, that
So-
does not include the reductions for next year.
Okay,
Those are
this
not-
is just certifying
The current year.
The current year and the actuals that are reflected in this. So even though you showed the projections in
the multi-year.
the multi-year, that's not what is up for approval tonight. Is that correct?
The multi-year is part of that document. It's in the back, and it's also in a spreadsheet summary, so it's a little bit easier. You must include a multi-year with your current year. You have to have 3 years certified. And I believe you all received a letter we had from our county education office on the first interim certification, where the county did require budget adjustments in the second interim to address deficit for future spending.
So I think when the district first presented us with the budget kind of conversation, I believe it was approximately $800,000 in cuts that were recommended from the district. Is that correct?
At the last board meeting,
No, in the very beginning.
yeah, they've changed. It's changed at every meeting.
Right.
We've had different scenarios.
Yeah,
I believe
it's-
there were 6 or 7 scenarios.
So how did you decide which one to include for the multi-year?
The last meeting, the board, the majority of the board had determined that they were comfortable with the 1.16 to move forward as we built our budget.
Okay.
So this document is not adopting a 1920 budget. This is approving the 1819 for second interim report.
Well, for me, I've had some time to think about the different scenarios and options, and I really appreciate all the work that's been done to create different options. I've also heard back from constituents who've had a chance to digest some of what they've seen out there. And there is some consensus on a few things, not on everything, and I just want to speak to those tonight. The consensus being from various constituents that cutting the media text is not recommended and cutting the instructional aids is not recommended. And so with that in mind, and understanding that the $1.1 million, the entire package, is what's included in here.
You are not taking action on a 1920 budget tonight or reductions. We are approving the second interim report, and in the second interim report, I have to provide a multi-year projection that is included in the report, but has no action or bearing on the future year budgets as far as decision making. They're assumptions. So if you go back to the Ed Code, it's required that the board approve this document in order for us to get certified at the state and the county and then the state level. This document's not determining any level of cut, any
Right, I
position
understand.
cuts.
The multi-year level, the
It's
whole,
just a dollar
the whole
amount.
goal of that is to ensure that we have our minimum kind of requirements covered. However, a choice was made to go based on those 1.1 million in cuts, and so therefore, if I approve this document with those cuts in it, it does stand to reason that I then support that full piece, and I do not support that full piece. And so
We'll be
I
bringing-
just want people to understand, those of you who may be listening, those of you who are interested, that I have heard you. I have heard that you do not support cutting the media texts, that you do not support cutting the instructional aids, and that you feel that 1.1 million is an excessive amount to be cut. It's not necessary, and that for those of you who've contacted me, student achievement is our highest priority, and that this amount of extensive budget cuts is not what's needed to move student achievement forward at this point.
Okay, any further discussion? All right.
Yes, no, actually, I do. And yes, the very first meeting we had scenario of cuts in for 800,000. Then it was following week 946,000, and then the final scenario included one. Let's call it 1,100,000, and that's a whole scenario that basically includes all those reduced hours, all those cuts, and that is why I think that we have to respond to the community, what they think, and that's why we had instruction lates last board meeting. That is why the community points it out the coastal view, and that's why we have actually I have disagreed with this major cut, 1,116,000. That's just too much. That it means that
Okay.
not even reducing, not even $1,
Yeah.
and I
So-
cannot.
So we're not voting on that
I
right
know,
now.
I know, but if I approve this, that would actually send the wrong message.
So I'm gonna
Well,
I'm
then-
gonna take you back to slide 3. This is an interim report. This is not a 1920 budget. This is nothing other than an interim report. And the ed code's very clear, and I think we need to be careful about making this presentation into a budget discussion for 1920. And we're presenting actuals. Those actuals are the ones that are part of the report, as well as any current year changes. We're not doing any action on a multi-year budget right now. The multi-year is presented to make sure there's 3%. It's not binding.
So
It was really helpful to see the actuals. I actually wish that we had seen them earlier in the budget discussion. I also,
they wouldn't have been actuals, Maureen.
with regard to the actuals, I did have some concerns around areas where, 2 areas. One is where there's a $100,000 transfer that's sort of zeroed in and zeroed out. Do you know what I'm talking about?
That's a deferred maintenance transfer from restricted maintenance into Fund
It's
14.
required.
It's done every year, required by law.
Okay, and the second piece was just there's quite a few areas, and I'm not going to bore us with them, but there's quite a few areas where we have a budgeted amount, we have an actual, and then we have the budgeted adjustment, and there's no adjustment made, even though the actual amount that we've spent is very, very low. I'm just curious as to why.
These are only partial year actuals. You don't make adjustments. Like if you've only spent half of it, you don't change your budget by half.
But what I'm saying is, wouldn't that change for the next year's budget? Wouldn't you adjust it to
we haven't
reflect?
Reflect what? We haven't spent our budget yet, so we're only showing half a year spending.
But there's so, and you know, I'm just curious.
Showing at a point in time in the
money-
year.
The
Right,
money,
so-
the money has been allocated for
I
those
understand.
expenditures.
I understand.
But we've only spent a certain amount.
I understand. So, what about areas where we've overspent? They weren't adjusted either. So, like for the CTE amount, the budgeted
Those
amount
come out
was
of fund
about,
balance. Those are in restricted fund balance, and that's how the accounting is managed.
So
But then
I think that
for the
but that's-
difference
that
between column
that
B.
confuses people sometimes, doesn't it? I mean, Maureen, it's the CTE.
No, I
Transfer?
just use that as an example for, there are areas where we've overspent, our actuals, we've overspent our budgeted amount, but the projected year's totals have also not changed, and that was confusing to me.
Can I try to explain the CTE grant? So
That was just an example, so I don't want to get hung up on that. I don't want to get hung
but
up
you're
on
using
that.
it as an example. I'm just
Well-
trying to clarify because you have confusion over it.
I know, but what I'm saying is there are numerous areas where
But I
the
think they're all- they're-
actuals
but-
are much, like,
it
we've
would be
spent
easy to
more than have been
explain.
budgeted. And then the projected year's totals have not been adjusted either.
I would like to hear about the CDE grant, because I'm not familiar with it.
So with the CTE grant, the district goes out for money. They go out, ask for money. But we really don't have the money until we spend the money. So it doesn't get put into the fund balance until the money's allocated or actually spent. So then you increase your revenue side because now you've got that money coming into that fund, but it's still going out. So it's an increase in fund balance on the revenue side because you're eligible now for reimbursement because you've spent that money. And that's why the fund balance increases. That's why the revenue side increases, because prior to spending that money, you weren't eligible to receive the reimbursement. Is that pretty good?
Mm-hmm.
I mean, a
Right.
simple way of putting it.
Right, and also, Maureen, you're looking at the SACS report, and it's very complex. There's over 100 pages in that report, and they all say different things. And I'd be happy to sit down with you to go over how to read that report. That's why I've given you the summary, and I've given you a multi-year that shows the current year, restricted and unrestricted, because that's a difficult report to read, and where you see the negatives and the positives, they may not mean the same thing that you're referring to.
Well, and we're only given, we only receive this
Friday.
and we have to be responsible for it by Tuesday. So I think the bottom line, though, is I think it's great that we've got the actuals. The news seems to be rosy. That seems to be better than we expected in terms of both the income and the expenses side. And that's where I feel even more confident.
I don't see that.
And that's where I feel even more confident in saying to the community that 1.1 million in cuts is extreme. It's not necessary, and I support retaining the instructional aides and the media techs.
Okay, so that's not what we're here to discuss tonight. All we're here is to approve the second interim report, and it really has nothing to do with the budget for the 1920 school year. Okay, so we have a motion and a second. All those in favor of approving the second interim financial report, say aye.
Aye.
Opposed?
Nay?
Nay.
Okay, motion carries. Thank you. All right, move on to item C22, auditor selection for fiscal years 18-19, 19-20, 2021.
I'll motion to approve the auditor selection for fiscal year 18-19, 19-20, and 2021.
Can I get a second there?
I second the motion.
Okay, discussion?
Personally, I'm delighted that we're switching up auditors. I think I've actually asked for that for the last 2 years, so I think it's great. Thank you.
Okay, any more discussion? All those in favor?
Aye.
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 Okay. I think we're adjourned. Thanks.